What's going on, everyone? My name is Mandeep. Welcome back to another amazing episode. Today we're here in my office. As you can see, this is the headquarters of Bala Real Estate Group and also Clears Construction as well. My cameraman today is my cousin Harmon, who is also wanting to get into real estate, and he's gonna be shadowing me today. Today we're gonna go check out two properties. One is a lot and the other one is a townhouse, a site that we're gonna check out. Both of these properties are in Chilliwack. And then I'm actually gonna show you one other property that we recently just sold as well. Take a ride with us today. So hope you enjoy this episode. If you haven't already, please subscribe, hit the like button, share this video with all your friends and everything like that. That's how I get paid. And that helps me out with my channel and helps my channel grow. So let's go check out these properties.
Hi, good afternoon. Welcome to Tim Hortons.
Hi, could I get two medium doubles?
Two medium coffee double?
Yep.
Anything else?
No, that's all. Okay, so we're looking at two properties today. One, I want to show the viewers what it costs to purchase a site like a townhouse site. Also, how much money would you need to buy a property like a bare land property and then develop it or build a house on it and then sell it. Like, what type of money would you have to have in order to purchase those kind of sites? So the two properties that we're gonna go check out are this one right here. That's the townhouse site. And the other one is the lot, which is this one right here. So we have buyers that are looking for these type of properties. We work with a lot of investors, and it's just a little bit of a tough market right now because there's so many buyers right now. There's such low inventory, and it's a very competitive market. I was thinking about making a video the other day, and in that video I wanted to show the three types of investments that you can make. One of them is buy and hold a property, the other one is develop a property, and the other one is construct. So buy and hold is when you buy a house, you put it on rent, right? That's easier to do. I think out of majority of the investment types, that one requires the least amount of capital to do. So that would be like straightforward. It would be like a 20% down or maybe a 25% down. The other ones are a little bit more complicated. You need a little bit more down on those properties. What you need is, so basically, let's say you buy a piece of property like this one. This is listed for $679, and you want to purchase this and you want to make a house on it. Then you got to factor in the cost of the house as well, right? So I'll talk a little bit more when we get on the site actually about it. So until then, we're gonna cruise it. Okay, like I was saying before, we're just pulling up to the lot, which is for sale. This is on sale for $679, and this is a little bit different than the down deposit or the mortgage structure is a little bit different than if you were just to buy a house and hold it. So basically, for something like this, the bank is going to look at you and they're going to say, what is the value of the house once it's made? So it's listed at $679 plus the cost of building it. Let's just say that the total ends up being like about 1.4, something like that, including the GST and everything like that. And the bank, what they're going to do, and the lot is right there, so just get a shot of that. That is the lot, which is for sale. I'll bring it around back. Perfect. So basically, the bank is going to look at you and they're going to appraise the home. They're going to ask you as well what you think it's worth. So let's say the appraised value is $1.4 million, and they're going to ask you to give it down to a deposit on the appraised value of the home. They're not going to ask you to give a down deposit on what the cost of construction is. There's a possibility on bigger projects that could happen, but on something like this where you tell the bank, hey, I'm gonna build this home and then I plan on selling it after, they're gonna say this is the appraised value and we want a down deposit of the appraised value, right? So in this case, that is 1.4, so about 25% of that, whatever that equals. If you were buying just a lot and you wanted to hold the lot for a little while and then you were going to build, just to acquire the lot, you would have to get about 35% down on that lot. Another question that people would ask is, how do you structure the mortgage? On something like this, when you approach Vancity, what they're going to do is they're going to give you a progressive mortgage. And basically what that is when you give 25% down deposit on the appraised value at time of sale, they're going to give you a appraised mortgage. They're going to lend you the initial draw, which is about 60% of the land value. And then they move on to, so the builder has the responsibility of excavating, pouring the foundation, putting on the stud, or getting it up to about the studs, and then you have the roof on and the windows as well, and that's what you call lockdown, and you put on the dummy doors and everything like that. And that's when the bank sends the appraiser, and they appraise the property at that point, and then they lend you the next phase of the funds, and then it keeps on going like that. So you call the appraiser at drywall maybe, and then once the finishings are done and when the entire landscaping is done at the very end. So it's called a progressive mortgage, and that's what Vancity does. I'm not sure exactly how Coast Capital does it or Canadian Western Bank does it. Alright guys, I'm back in the studio. I want to talk about one more property before I end this video, and that property is a triplex. This was a triplex for sale in Chilliwack that my clients purchased about 2 or 3 months ago. But before I get to that, I just want to talk about the story before we actually purchased the asset. So I had some clients that came up to me and asked me for a cash flow property. They were originally looking for a condo, and we looked in very strong markets like Mission and Chilliwack. We looked at 2 bedrooms, 3 bedrooms. We looked at some really nice condos. We also looked at some condos that needed quite a bit of work. And for some reason, the numbers just weren't adding up. If the numbers made sense, the building didn't make sense. So you have to be aware of not only the asset being good in a building, but you also have to be aware of what's going on in the overall building as well. There could be some foundation problems. There could be some pending repairs that need to be made, and those bills could be very, very big for the buyer of the or the owner of the condos or the strata, whatever it may be. So we also looked at some townhouses as well, but the numbers just weren't making sense. So then we finally went to residential detached homes, and what my client was in search of was a cash flow property. And as you may know, that is pretty tough to do in BC, especially in Vancouver. I know that there are pockets here and there and opportunities here and there where you can probably try to pull that off. It is rare, but it is possible to do. But so then we also looked at some residential homes as well, and what happened was that we actually came close to purchasing a couple of them, but we were always outbid by other buyers. So the problem was that my clients were savvy investors, and we were competing against people that were looking for homes. And when you fall in love with a home, you're willing to pay an exuberant amount of money for that asset. In their eyes, in someone's eyes that is purchasing a home to live in, they're not even looking at it from the perspective of an investor. They're looking at a 10-year home or possibly even longer than that. It didn't make sense to compete with people that were paying a ridiculous amount of money for these homes. After looking at the residential property, my buyers were pretty frustrated. We were pretty tired of looking at opportunities. And eventually I came upon this property, which is a triplex. And without giving out too much information about this property, I sent this to my buyers, and it checked majority of the boxes. The most important one being that it is cash flowing. And there was also room to improve the rental income as well, because there was a couple tenants that were looking to move out. Because Chilliwack is a very strong rental market, same with Mission as well. The price point was about 1.25 or just under that. And even at such a high price point for a triplex, the rental income was very, very strong. Each unit it can bring in about $2,000 per unit. So that's about $6,000 total monthly revenue. And these are the type of properties that you want to find. So it is possible to find cash flow properties in BC. You just have to find that right opportunity. So this one, it was well kept on the inside. It has about 6 bedrooms. It has 3 full washrooms as well, and the tenants were long-term as well. And I believe it was only one owner for a very extended period of time. I think this asset was part of the family for a really, really long time. So there are properties that you can find in BC, and they can be cash flowing as well. But you just have to really take your time and be patient and find those assets. So if you guys like these types of videos, make sure you guys like the video. Please share, comment down below. That helps me out big time with the algorithm. And yeah, see you guys in the next episode.